Yo, yo, yo. Welcome back to the channel. If this is your first time here, my name is David. I analyze AMC's chart a lot, and I just wanted to come back with this video just because I was just streaming. I jumped back on the live stream from earlier. I left it up in the afternoon. I was hanging out with my family and stuff, and I came back to the chart. And I got motivated, and I just kind of played around in the chart. I was chatting with some people that were still here. You guys are crazy, by the way, for just like that. Like I came back, there were still like 20, 30 viewers, and I had no I had no I hadn't been there in like hours. But anyway, I'm babbling on. Yeah. So the past few videos that I've made, I want you to go check them out. And, maybe after you watch this video or whatever, however you want to do it. But I've been talking about Wyckoff on AMC. And look, this isn't a prediction or anything, and it's certainly not financial advice. I'm not a financial advisor. I'm only making these videos for entertainment purposes and to give you my opinion. But my friend Mocha, my underscore friend Mocha on Twitter. Let me go find his account right quick so I can show you guys him. Definitely go check this guy out. He has been doing some cycle theory stuff. And I wanted to test his theory and put it against the Wyckoff pattern that we've been looking at on the channel for the past few days. And see how it stands up. And it's actually pretty interesting. I'm not gonna lie. It's pretty interesting. And so his theory is that we just entered April. So what I did was I took a bars pattern from this rundown in March, and then I kind of just overlaid it here. And I've been messing with this Wyckoff pattern. I was messing with it on the stream all day today and different theories and stuff like that. And I was starting to think maybe like end of October, early November would kind of like make the most sense. But now, when I look at this and I'm using his theory, y'all definitely go follow him and tell him that I sent you, by the way. Because, I want him to get credit for this. Even though, like, I spent the time making the chart and stuff like that, like, he's the one who kind of put me onto the idea. So, anyway, oh, you can't see the chart. I'm sorry. Yeah, basically, if you're not familiar with Wyckoff accumulation, I encourage you to go look into it. And I'm going to make full videos that kind of break down everything about Wyckoff, and I'm not going to use them in the context of AMC or anything. I'm just going to use like multiple examples. But essentially, it's a schematic where institutions are trading in certain liquidity zones that you can see here at the bottom with red, at the top with green, that act as support and resistance as institutions are accumulating an asset. And these patterns, Wyckoff tells people to use them as if you're trading against one person and they're trying to exhaust you, or it's essentially institutions trying to exhaust retail. So what they do is they buy the asset up, get retail to get excited and start putting liquidity into it, and then they start a sell-off and then freak retail out and get them to sell down, and vice versa, blah blah blah. So and this isn't specific, I'm not saying like specifically apes are selling or anything like that, but you have to realize that there's more than apes in this play, right? So that sell pressure can come from a bunch of different places. So anyway, this is the schematic. You have your primary sell-off here in July. You have your sell climax here in the middle of July, your automatic retest, and then your sell test right here. Again, if you want more detail on these definitions, subscribe to the channel and hit your notification bell. I'm going to be making content that breaks all of this down, and it's more evergreen. Like, you can always refer back to it. And then you go into phase B. You have your sell test in phase B, where you go down and you actually test the bottom of the liquidity zone. You have this next run up here in phase B. You come down. In this schematic, there's a spring in phase C where you test below the liquidity zone to see if retail is going to buy in again. And then you snatch the price up. Now, in the schematic, it doesn't blow up this aggressively back all the way up to the top of the zone. So maybe that's not what happens. Maybe it's a little bit shorter, or maybe it does happen. Or maybe this is actually the test, possibly. And then this is your last point of support. I think that's what the LPS stands for. And then this is your backup. That makes sense. This makes sense. Okay, so let me change the chart a little bit. Back up. And then this is your LPS. And it doesn't have to match up exactly. Like, it's just what these kind of moves like represent. So it's not so much about the exact nature of it, but, and this isn't financial advice, this is just kind of like, you know, it's analysis. It's just me kind of seeing what it says. This analysis would have us landing at the end of November for new all-time highs, early December-ish kind of area. This is crazy, though. I mean, I don't know if we're going to get this extended on this particular move and what that's going to look like, but this has us all the way up at like 350. Let's see if that's a fib extension level or something of significance. So the way that we would do it on the previous runs with the trend-based fib extension to predict the tops is we would measure from the bottom of the before the run to the top of the run in January to the next bottom. Ooh, hold on. Let me remove all these extra ones. Sorry. We don't need all these. We just need a few of the main ones. So this one predicted the top with the 3.618 fib extension. Can't imagine that we're going to get like a one that gives this number. I mean, it's so high. It's so outlandish. I mean, actually, it's not that bad. The 4.236, which is like very, very overextended, very overbought, but that would give you that 300 plus price target. I don't know. I mean, you do have this bounce here at the 2.618 if you do it this way. Wow, it's kind of freaky how that works, isn't it? Yeah. So I guess we can just run this theory all the way down to the ground. And you know, I know everybody's gonna say it's MOAS. They're gonna start covering if it goes that high, whatever, you know. And I'm not making fun of that idea. I'm just saying, like, let's just pretend like they won't, and AMC just keeps doing what it's done already, you know, because history is the best way for us to kind of, you know, it's good to point to history to figure out what the past. I mean, the history to see what the future is gonna do. Jeez, I'm tired, guys. It's been a long day. Your retracement levels would look something like this. So historically, like on the January run, AMC did go to its after the January run, after the buy button was taken off. This was a 786 retracement here. So it actually broke below the 786 briefly, but you know, it doesn't have to like actually hold this. It just, as long as it's like the general region is how I use it. But it doesn't necessarily have to do that because so far it hasn't done that in the run since June. The run down, no matter how you measure it, really. It hasn't gone to the 786, so you can see here. I know it's a lot of noise, but it kind of bottomed out at the 618. This would actually have it go below the 618 and the 0.65 Fibonacci levels again. So if it just did what it's done historically, like maybe it bounces off of the 618 and then it kind of just bounces around. This would also introduce extending of the cycle theory. If AMC, of course, continues to go on these cycles for whatever reason, and it continues to go higher and higher, this would insinuate that the peaks would be further and further apart if that was to continue. And what I mean by that is if you measure from the top of the run in January to the top of the run in June. Oh, let me get the daily chart here so that it's just easier to measure it in days. It's a little bit more realistic, I guess. You measure here to here, you get 87 days. And then from the June run to this now, if it were to be a December run, it would be 126 days, which is a significant increase in time, I'd say. But is it really that significant if you're having these sorts of huge runs? Let's measure how big of a run up this would be also. About, at least. 1,000%? That's just so, it seems, I guess, you know, you're kind of stuck in the reality you're in. It just seems so explosive. 1,000%. I just, again, like, I know everybody is gonna say MOAS is gonna be way more than that. Which isn't. Oh well. You take the bottom of this, you had 950%. And then let's take the bottom of this, maybe. You had 1,200%. Maybe. I don't know. It's pretty interesting. Pretty interesting stuff. Yeah, I don't know. Maybe it's not that crazy. Maybe I was being hyperbolic. Anyway, yeah, so that's it for that video. I just wanted to kind of give this new theory on Wyckoff. I know a lot of people are going to be in the comments like, oh, you know, people are going to be mad or whatever. That's fine. My job is to come here and kind of just show different possibilities that I'm looking at and what that could mean and everything like that. So it's not so much about me being right or predicting the future or anything like that. It's more about me analyzing the chart and trying to figure out what it's telling us. And I'm going to be wrong a lot, but I'll also be right sometimes. So anyway, thank you so much for watching the video. I appreciate it. If you enjoyed the video, make sure you drop a like on the video, subscribe, and turn on post notifications if you don't want to miss my future uploads, like me talking through all of the definitions and things on the Wyckoff schematics. But yeah, other than that, follow me on Twitter at David Marino Jr. and I do have a Discord link in the description down below. You can go ahead and join my Discord where I chat a little bit more. I'll share, you know, throughout the day and stuff like that. Talk to the community. Real positive environment over there. So check that out if you're interested. And until next time. Would you just look at that chart? Would you just look at it? Just look at that chart. Would you just look at it? Look at the chart. I just want you to look at it. Would you just look at it? Just look at it. Just look at the chart. All right. Take it easy, guys.